Let's get to audience questions for the week, starting with a question about the stock market. Hey, David, if the stock market crash continues, what are you going to do as a result in terms of investments? Well, listen, what I've been doing for the last like 8 to 10 years is once a month, I buy a little more mutual funds. And what I'm going to be doing once a month is buying a little more mutual funds and not really thinking about it. I mean, that's if you know my investment philosophy, and of course, this is not investment advice, to be clear. I'm telling you what I'm going to do, and this could be terrible advice for other people. This is not advice. It is simply what I am doing. I don't try to time the market. My approach is on a regular basis, accumulate more and more shares of mutual funds, wide, broad-based mutual funds, entire country, total world stock market index mixed in with a little bit of bonds. And when prices drop, I just keep buying. And what is important to remember is you don't really lose money until you sell at a loss. Your unrealized gains go down, your losses go up, depending on whether you're up or down. But until you actually make the call to sell that stock or those mutual funds, you don't really lose anything. You would if you sold, but you don't if you hold. And what is really important to consider is that dividends actually tend to stay relatively level even when stocks decline in value. And what that means is that when there is a stock market correction, assuming, of course, that your time horizon is such that you can, bear the temporary reduction in stock prices, you're buying more dividends for fewer dollars. You're getting more shares if you're putting in $100 a month or however much it is that you're putting in. So I don't try to time the market. I will continue doing what I have been doing for many, many years if we are indeed sort of at the beginning of a stock market decline. And eventually we're going to be at one, right? I mean, we talk all the time, Pat, about how economists are notoriously bad at predicting exactly when these things are going to happen. But at some point, there's going to be a relatively significant stock market correction. And if your time horizon allows for it, what you can do, if you are of my investing philosophy, is do the exact same thing.
Yeah, we're currently in the second longest period of prosperity in American history. So you'd have to imagine it's going to turn around at some point, maybe not today or tomorrow, maybe it's next year or the year after that. We don't know exactly when.
Don't know.
Are you going to invest in any precious metals? Because sometimes when there's a stock market crash, the price of like gold and silver start to go up.
That's a form of trying to time certain sectors. And I don't really do that. I have tiny little pieces of precious metals companies because I'm invested in the broadest possible mutual funds in terms of stock, total US stock index and total international stock index. So do I own some precious metals there? Sure. Am I going to try to move money from whatever, something into precious metals as a result of what I'm not going to do that. And particularly because when you do that, you also accumulate taxes that you have to pay. If you have gains, if you have losses, you can write them off. You incur transaction fees depending on, again, what it is that you're doing. So the lowest possible cost, I think I pay like 0.05% a year fees on the mutual funds I have or something like that. Lowest possible cost, fewest transactions, just continue accumulating and, let 30, 40 years go by if you have the time.
Yeah, if this happens, I think I'm going to have to put my day trading hobby on the back burner.
Yes.
And it sounds like bad news, but it probably will make me more productive here at the show on a day-to-day basis, because that takes up a lot of time.
It does, and also the online poker playing is probably time to wrap that up.